Welcome to the Lecture 14 on Public Sector Accounting Future Challenges. My name is Lisa Schmidhuber and I'm a lecturer and researcher at the Johannes Kepler University in Linz in Austria. In this lecture, we deal with the development of the European Public Sector Accounting Standards. At the beginning, I'd like to give you a short overview on the lecture. The overall topic of the lecture is the development and implementation of European Public Sector Accounting Standards. First, the European Public Sector Accounting Standards are explained and the reasons for the planned implementation are discussed. Second, the lecture outlines the development of EPSAS, the status quo, and gives a future outlook. Finally, the lecture highlights the EPSAS implementation challenges and requirements for organizations. The lecture is divided into 6 parts, and we will start with a short description what European Public Sector Accounting Standards actually mean. After a short outline of the development of EPSAS, we continue with the arguments and the expected impacts of the EPSAS implementation. Moreover, we will discuss how EPSAS are related to EPSAS. The main part of the lecture focuses on the implementation. We will talk about the EPSAS framework, the institution which plan to adopt EPSAS, and the implementation challenges and requirements. Finally, I conclude with summarizing the lecture. Before we start, let's see what you should learn in the following lecture. After this lecture, students should know about the characteristics of European Public Sector Accounting Standards, the expected positive and negative impacts of EPSAS implementation, how EPSAS relate to EPSAS, which institutions are supposed to use EPSAS, expected challenges, risks, and requirements when implementing EPSAS, and finally, the future prospects and advices for the implementation of EPSAS. You've already heard about European Public Sector Accounting in the previous lectures, but today we will talk about the EPSAS in more detail. Let's start and look what EPSAS actually means. As you already know, the abbreviation EPSAS means European Public Sector Accounting Standards. Until now, EPSAS are not fully developed and implemented, but they are expected to be by the end of 2025. EPSAS are a set of accrual-based European standards for public sector accounting. They are grounded and legislated on the basis of EU treaties and therefore based on an EU governance. EPSAS are common to all public entities belonging to general government for all EU member states. Before we will talk about the specific characteristics of these standards, let's talk about the development of the EPSAS standards. The idea of reforming public sector accounting is based on the inefficiency of traditional cash-based government accounting systems. These are not capable to show resource consumption or to provide comprehensive information on the public entity's financial situation. To prevent future public financial crises, non-transparency and highly cash-based budgeting and accounting systems should be avoided. EPSAS are expected to correct these deficits. The basic idea of European Public Sector Accounting Standards was mentioned in the so-called six-pack legislative package. This package was adopted by the Council of the European Union in 2011. They included 5 regulations and 1 directive are about subjects related to deficit, public debt, expenditure benchmark under the preventive arm of the pact, and reducing macroeconomic imbalances. These elements have been approved by all 27 member states and the European Parliament. One of these elements is the so-called Council Directive on requirements for budgetary frameworks of the member state, or in short, the Budgetary Framework Directive. The idea of this directive is that public accounting systems, which comprehensively and consistently cover all subsectors of general government, should exist in the EU member states. To achieve this aim, the directive calls the European Commission to assess the suitability of the international public sector accounting standards for the member states. We will talk about the link between EPSAS and EPSAS later in this lecture. In 2012, Eurostat launched a public consultation to review the suitability of EPSAS for EU member states. All national governments, authorities, organizations and citizens were called to participate in the consultation process. Furthermore, Ernst & Young, an international professional services firm, presented a study related to public sector accounting and audit practices. The study's aim was to collect relevant information on the existing public accounting and auditing in the member states. Therefore, questionnaires were sent to representatives of national accounting divisions and accounting and auditing practitioners in all 27 member states. In general, the analysis revealed that the European government accounting arrangements are greatly heterogeneous. In 2013, the European Commission published a report on implementing harmonized public sector accounting standards in the EU. We will talk about this report in detail in the later chapter. In general, however, the Commission explained that EPSAS would represent a suitable reference framework for the development of EPSAS, but that they cannot be easily implemented in the EU member states. Following a conference on implementing EPSAS, the EU initiated public consultation in 2014. The public consultation on future EPSAS governance principles and structures tried to collect the opinion from a variety of stakeholders relating to EPSAS governance. A second consultation collected information about the potential impact and the expected costs of implementing accrual accounting. Furthermore, a technical analysis of the suitability of individual EPSAS standards was prepared. Resulting from these steps taken from 2011 to 2014, several task forces and working groups had been set up. In addition to specific EPSAS cells which handle with specific topics, the EPSAS Working Group is a permanent forum dealing with the introduction, the development and the operation of EPSAS. Furthermore, the group identifies key issues for EPSAS governance and standards and discusses how to develop and introduce suitable EPSAS structures and requirements. To give an example for a specific EPSAS cell, we will shortly talk about the EPSAS cell on first-time implementation. Because of the current discussion about the first-time implementation of EPSAS and the opening balance sheet on an accrual basis, this cell was established in 2015. The cell is not a decision-making body, it is a reflection group. Specifically, the EPSAS cell on first-time implementation should prepare a draft guidance note on first-time implementation for the opening balance sheet. Besides, the necessary level of guidance for the opening balance sheet should be identified. In addition to that, the included cell on definition works on definitions of relevant basic terms. After this presentation of the EPSAS development, let's move on to the specific characteristics of the European Public Sector Accounting Standards. To understand the reasons why the implementation of harmonized public sector accounting standards is crucial, you have to learn about the past developments in terms of public sector accounting. Herman Van Rompuy, former Prime Minister of Belgium and President of the European Council from 2009 to 2014, pointed out that inaccurate reporting of government accounting has been reality in Europe. Mr. Rompuy proved this statement by following aspects. Inaccurate accounting contributes ill-founded policy decisions, and insufficient consolidation efforts lead to underestimated deficits and debts. These are some of the reasons why the former president of the European Council calls for harmonized public sector accounting standards in Europe. Furthermore, the European Commission explains that there are currently no EU standards which regulate how individual transactions and economic events should be recorded, recognized, measured, consolidated, and reported to the customers. As we've heard already in Lecture 6, the main reason for harmonizing accounting standards is to provide comparable and transparent data. Currently, at the level of the EU, it is not possible to compare the economic governance, internal markets, and statistical data. These non-comparable and non-transparent data furthermore lead to problems and challenges at the national and the entity level. For example, the current situation might hamper efficiency and effectiveness, imply limited accountability, reduce access to financial markets, and lead to significant challenges for public auditors. After discussing the various current challenges and obstacles in terms of public sector accounting, we will have a look on the expected impacts of the EPSAS implementation. The following aspects are based on the reported impacts of a study from PwC. In general, the impacts can be divided in social impacts like effects on the labor market and economic impacts. These economic impacts can be divided into 3 parts: accountability and transparency, better decision making, and impacts on control and administrative process. Now we will look at these groups of impacts in more detail. First, accountability and transparency. The most common types of benefits reported by the member states relate to transparency and comparability of financial information from governments. Reporting a government's financial position and performance in a complete and comparable manner is associated with higher transparency. The best way to increase transparency is to harmonize reporting practices. Especially for this reason, the accrual basis is necessary because it recognizes economic transactions and events as they occur. Accrual-based standards will also enhance the comparability of financial information over time between member states and across individual entities of government sectors. Furthermore, the similar financial information should be more comprehensible for external users. Comparable financial statements, moreover, lead to open and accountable public administration. Second, we have better decision-making. Higher transparency and accountability of a government's financial position is also positively related to decision-making of public managers and politicians. In addition to higher comparability of information, using accrual data can improve information and administrative processes by capturing and reporting financial information. Therefore, governments are able to assess their performance and to compare this performance over time and across entities. As mentioned before, this provides public managers and politicians the possibility to make better decisions on how to deliver public services. Third, we have the impacts on control and administrative processes. The EPSAS implementation has of course a huge impact on current control and administrative processes. Especially, the implementation of a suitable IT infrastructure will be crucial. On the one hand, this application of the IT systems may occur significant investments, but on the other hand, increased efficiency could reduce administrative costs. Fourth, we have labor market impacts. The social impacts of the EPSAS implementation especially concern the labor market. The introduction might have a direct impact on the labor market in terms of public finance and accounting personnel and public auditors. It is expected that fewer resources will be required for transaction processing tasks. However, qualified staff is needed for more value-added tasks. Furthermore, there is a difference in the required skills between cash and accrual-based accounting. The accrual-based system needs more advanced skills and expertise, and for this reason, significant training for the current staff is indispensable. The support of the decision makers by conducting financial and operational analysis will be more and more important. If institutions are looking for qualified employees, it will be useful to recruit from the private sector due to similar accounting practices in private organizations. In addition to that, the mobility of public sector financial personnel will be enhanced across the member states. To understand what these impacts actually mean in practice, PwC assigns specific impacts to specific stakeholder groups. First, we have the preparers. We will talk about those who have to capture and record financial transactions and events and prepare the summary financial statements. The preparers are required to adapt accrual-based concepts into daily work. As mentioned before, there will be a need to increase qualifications and skills of employees, and this lead to more value-added functions of the staff. The stakeholder group auditors will especially profit from the harmonization of policies across governments and the greater standardization in audit methodology. Furthermore, they can gain benefits from high-quality information which is maintained by the reporting entities. Users within the public administration, such as public employees, can especially benefit from the change to accrual accounting. They are able to use transparent, comparable, and complete information for performance evaluation and decision-making. Furthermore, the long-term impact of current decision is reflected in financial statements. This can be an essential part to generate intergenerational fairness for citizens. The external users are all stakeholder groups and interested parties outside of the public administrations in the member states. For this reason, it is important that politicians who represent the interests of citizens understand the current position of government finances and the government resources. This can be enhanced by using accrual-based accounting. Another very important external stakeholder group is the media. It spreads the financial information toward the general public. Next to information provision, this could lead to significant negative impact because non-financial users may misinterpret complex aspects of accrual accounting. As we've already mentioned in this lecture, the enhanced transparency is one of the most important reasons for implementing EPSAS. Especially stakeholders in financial markets will benefit from the transparency and comparability assured by harmonized public sector accounting standards. After this detailed presentation of the expected impacts of the EPSAS implementation, we will move on talking about the implementation itself. Remembering the emergence of EPSAS, there we talked about the suitability of the EPSAS. The EPSAS provide a basis for the EPSAS implementation. In the following chapter, we will have a look on how EPSAS relate to EPSAS. First of all, what are EPSAS? EPSAS are the International Public Sector Accounting Standards. As you know from previous lectures, especially Lecture 8, EPSAS are equal-based standards for public sector entities. They are based on the International Financial Reporting Standards and are developed and published by the EPSAS board. Due to the fact that EPSAS are prepared and developed for the use of national, regional and local governments, it seems comprehensible to derive EPSAS from EPSAS to a certain extent. Before we have a look on the actual usability of EPSAS in this case, we will talk about important studies and reports from the last years. As mentioned before, the Budgetary Frameworks Directive requests the European Commission to assess the suitability of EPSAS for the Member States. The next step was to prove the suitability of EPSAS. For this reason, Eurostat launched a public consultation in the year 2012. 68 submissions were received from a variety of stakeholder groups, like public authorities, organizations, or private individuals. 38% of the responses mentioned that EPSAS are completely suitable for the implementation in the Member States. 31% say that a part of EPSAS could be suitable, but there would be obstacles in implementing EPSAS. And nearly 1/4 of the surveyed institutions consider that EPSAS are not suitable at all. Arguments for this negation are, for example, the statement that EPSAS are incomplete concerning their requirements for the public sector. Furthermore, it is mentioned that EPSAS are too complex and that there is a strong link between EPSAS and the private sector accounting standards IFRS. In 2013, the European Commission issued a report assessing the suitability of EPSAS. This report includes the received feedbacks from the public consultation in 2012. In the report, the European Commission concludes that EPSAS are a suitable starting point for the development of EPSAS. Nevertheless, the Commission reports that EPSAS for itself are not implementable in the EU member states in their current status. Following points will need to be addressed. The EPSAS standards do not describe precisely the accounting practices to be followed. In some cases, it is possible to choose between alternative accounting treatments, and this would reduce harmonization. Currently, the standards do not completely cover the characteristics, interests, and needs of public sector reporting. And finally, EPSAS are regarded as to be insufficiently stable because there are ongoing modifications to ensure timeliness and quality of the standards. Therefore, you can see that EPSAS can be a suitable starting point for the development of EPSAS. The question which arises in the EPSAS setting context is how EPSAS could be adopted. A Eurostat study from 2014 questions: which standards might be implemented with minor or no adaptation? Which standards need amendments or implementation guidance? And topics for which a standard exists yet but would be necessary. According to the European Commission, EPSAS should serve as underlying reference framework for EPSAS. To continue the adoption of EPSAS, let's have a look at how an EPSAS standard can be derived from an EPSAS standard. First of all, you have to evaluate if there are issues that warrant departure from a specific EPSAS standard. Or in other words, are there issues and topics which cannot be covered from existing EPSAS standards? If the statement is not applicable, you just have to make changes, with respect to style, terminology, or structure to generate a specific EPSAS standard. If the statement is applicable, you have to look if a separate project from EPSAS should be initiated. If this is necessary, an EPSAS independent project has to be started. But if no separate project should be initiated, the EPSAS standard has to be modified or adapted. Finally, this adapted and modified standard has to be reviewed with respect to PSA 2010, and if necessary, final adoptions have to be made. After this stage, the new EPSAS standard is created. At the end of this section, please note following important facts and differences between EPSAS and EPSAS. EPSAS are currently the main existing international accounting standards for the public sector, and to some extent, the European public sector accounting standards should be derived from EPSAS. A big obstacle refers to the different interpretation of accounting rules. While EPSAS sometimes allow the users to choose between accounting methods, EPSAS aim to achieve full harmonization. Another big difference, the standard setting power of EPSAS falls to the EPSAS board. Concerned countries are in this case mainly excluded. EPSAS endeavor to use especially the experience of the member states. Until now, we have talked about the development of EPSAS, the expected implementation impacts, and the connection between EPSAS and EPSAS. Now let's move on to the extensive subtopic EPSAS implementation. After talking about the EPSAS framework, we will have a look on specific implementation challenges and risks, the expected costs of EPSAS implementation, and an outlook on the next implementation steps. Let's start with the EPSAS framework. Basically, a framework is a structure which provides orientation for the standard setters and users for standard development. The EPSAS framework should comprise and consider various key factors, like the underlying governance principles, the governance mechanism, the due process, the standard setting capacity, and it also includes the use of EPSAS as first reference base for the development. The EPSAS framework is developed by specific institutions like the mentioned EPSAS Working Group and EPSAS Cell on First-Time Implementation. Furthermore, the EPSAS Cell on Governance Principles, the EPSAS Cell on Principles related to EPSAS standards play an important role. Let's see which tasks the specific cells have to fulfill. As we have already explained, the EPSAS Working Group is a universal and general institution. The basic idea behind the EPSAS Working Group is to build on the work of the task forces and to establish a more permanent forum dealing with the development, introduction, and operation of EPSAS. In particular, the working group should identify key issues for EPSAS governance and standards and discuss how to develop and introduce suitable EPSAS structures and requirements. The EPSAS Cell on First-Time Implementation, including the cell and definitions, prepares, among other things, a draft guidance for the opening balance sheet and elaborates definitions on relevant basic terms. Specific basics related to various topics are elaborated from the EPSAS Cell on Governance Principles. This cell establishes principles for standard setting architecture, for the cooperation of the involved standard setting bodies, and for accounting. Another important institution in this case is the EPSAS Cell on Principles related to standards. The aim is to support Eurostat in the preparation of technical level working documents. A specific feature of this cell is, compared to the others, that it is no decision-making body, it is just a reflection group. Before we finish talking about the EPSAS framework, I show you which requirements it has to fulfill. To fulfill the outlined tasks and to guarantee and support a full EPSAS development and implementation, it is of course necessary that the framework is developed before the EPSAS standards. To generate a binding effect to the standards, it is furthermore essential that the framework is ranked higher than the standards. In addition to that, this binding effect also should be addressed to standard setters and users to guarantee full harmonization. Another very important fact is the connection with the legislative procedures. To ensure the democratic legitimacy of the EPSAS framework, it should be adapted to the ordinary legislative procedures. To gain support from the European Member States, the incorporation of the representatives is essential. The framework should be developed by these representatives of the bodies that are responsible for setting the national public sector accounting standards in the Member States. In Lecture 6, we have already talked about the structure of the public sector and further on about the various levels of the general government. For the EPSAS implementation process, it is important to know which institutions plan to adopt EPSAS, and that's why we talk about these sectors in detail. Basically, the general government sector consists of institutional units with specific characteristics. The units are defined as non-market producers, and the output is for individual and collective consumption. The general government sector is financed by compulsory payments from units belonging to other sectors, and institutional units principally engaged in the redistribution of national income and wealth. The general government sector has to fulfill various tasks. For example, the sector has to produce goods and services to satisfy collective needs like defense. And it also has to offer goods and services for households' needs like state health care. Further on, it has to redirect the flow of money, goods and services among units. This happens, for instance, through the redistribution of national income. As you remember, this general government sector can be divided into 4 subsectors: the central government, the state government, the local government, and social security funds. The central government consists of administrative departments whose responsibilities cover the whole economic territory of a country. Its main function is to provide collective services for the whole community like national defense. The state government sector is a country-specific institution which exists in Belgium, Germany, Spain, Austria, and Switzerland. These areas are known by terms such as provinces, Länder, cantons, republics, or administrative regions. This sector is defined as a separate institutional unit, which exercises some government functions and is located between the central government and the local government. The state government sector has specific tasks and authorities. For example, it usually possesses the fiscal authority to levy taxes on institutional units that are engaged in economic activities or residents in its competence area. The local government sector defines types of public administration whose responsibilities cover only a local part of the economic territory. This especially means that the local government sector typically provides a wide range of services to local residents. Finally, the social security funds are also a country-specific institution. There are a central, state, or local institutional unit whose main activity is to provide social benefits. These presented sectors are planned to implement the EPSAS standards. In order to evaluate which effects this implementation would have on the various institutions, a study was contracted by the EU Commission and conducted by PwC. As presented in Lecture 6, the sovereign debt crisis highlighted the need for governments to reinforce fiscal sustainability. This aim should be reached by a more robust and transparent reporting. Previous studies and reportings concentrated on the question if harmonized public sector accounting standards are needed in the European Union. Further on, the possible link between EPSAS and EPSAS was a crucial part. As a next step, the EU Commission contracted a study conducted by PwC, a multinational professional services firm, to measure the impact of EPSAS implementation on the member states. In detail, the study has, for example, the task to assess the costs and benefits of the EPSAS implementation at EU level. This should be reached by collecting information of member states about their experiences they made on their way to equal-based standards. In addition to that, the study tried to analyze the application of EPSAS by the member states. The information needed has been gathered by various sources. Beside academic literature and public debates, interviews with selected countries and questionnaires sent to each of the member states have been an essential part. Because we have already talked about possible EPSAS implementation impacts in detail, we will now have a look at the expected EPSAS reform costs. Currently, there is only limited information on the costs of actual accounting reforms. Due to that, PwC tried to elaborate some scenarios instead of developing a detailed cost model. The study quoted 5 main expected cost drivers. Let's start with the current accounting maturity gap. Based on a scoring derived from responses to a questionnaire, the current degree of compliance of the government's accounting rules with an EPSAS-based benchmark is assessed. Furthermore, it is assumed that the number of processed transactions, collected data, and people to be trained increase with the size of government. This size was measured by taking a government's budget as proxy. The government complexity relates to the varying accounting maturities between and within the different government levels. Moreover, the study outlined the importance of the accounting staff. The training costs are expected to increase with the number of staff that needs training on new accounting procedures and policies. An important factor related to the expected EPSAS reform costs is the IT maturity. The crucial question is if the existing IT systems and the existing IT infrastructure of a government are able to support the full equal accounting implementation in respect to their capacity. For the following cost assessment, PwC presented the current IT maturity from the member states and on various levels of government. Basically, the IT maturity is related to the accounting maturity. On this table, the IT maturity of selected countries is presented. You can see the enormous difference in Austria and Germany between the IT maturity on the central and on the local government sector. Finland and Portugal report a moderate level on both sectors, while the United Kingdom almost reaches full IT maturity. The findings of this table are essential for the upcoming presentation of the expected EPSAS reform costs. For the cost assessment, two different scenarios have been developed. Scenario 1 describes the best case scenario. All governments have an IT infrastructure which is capable for account-based accounting. It only has to be adapted. Scenario 2 is the worst case scenario. It assumes that there is a need for a severe IT system reform for all entities with low IT maturity. If you compare scenario 2 with the findings in the table, this would mean that Austria and Germany have to implement a new severe IT system. This would lead to higher costs compared to the other countries. Before we look at the expected costs of the selected countries in detail, you can see a list of all EU member countries on this slide. You have to remember that scenario 1 means that the IT infrastructure only has to be adapted. Scenario 2 means that there is a need for a new IT system in countries with low IT maturity like in Austria and Germany. For better understanding, let's arrange it a bit more clearly and concentrate on 5 sample countries. You can see the countries with the approximate number of inhabitants, and we added to this table the best case scenario, scenario 1, and the worst case scenario 2. The costs are presented in euro per inhabitant and count up on the number of inhabitants. There are some facts which may look strange at first glance. First of all, the enormous cost increase in Austria and Germany between the two scenarios. This effect is based on the low IT maturity on the various government levels in these countries. Because the IT maturity is lower than 40%, it is assumed that they have to invest in a new severe IT system and infrastructure. Portugal presents a moderate, respectively good IT maturity. That's why there is still a small difference between scenario 1 and 2, but far from the results for Austria and Germany. Due to the excellent IT maturity results in Finland and the United Kingdom, there is no difference between both assessment methods. Moreover, the data from UK lead to the lowest EPSAS reform costs in this sample. There is still a high heterogeneity according to the accounting methods and the expected cost drivers in the European Union member states. This results in a huge difference between the expected reform costs of scenario 1 and 2 in the overall European Union. The scenarios give a scaled up cost for the EU ranging from approximately 1.2 billion to 6.9 billion euro. Summarizing the previous slides, you have to keep in mind that these potential costs have been estimated on the characteristics and current practices in the member states. PwC points out that the actual costs may vary significantly from the estimated ones presented in the study. Furthermore, the expected costs should not be considered in isolation. The costs of EPSAS implementation are mainly one-off costs. While the budgetary impact can be spread over the duration of the EPSAS project, the benefits are for the long term and are expected to outweigh the costs. As we've already discussed about the expected positive impacts, we also should have a look on the expected negative impacts and the implementation challenges and risks. European public sector accounting standards or other national standards aim to guarantee complete and comparable budgetary data. In general, of course, one cannot secure that common equal standards really accomplish these expected positive impacts. In the last lectures, you have heard about various different accounting standards and instruments like the government finance statistics or the international public sector accounting standards. It is uncertain if the development and implementation of EPSAS is the simplest and less expensive, it is the most efficient alternative. Another fact you have to consider is the enormous demand on time and resources. Recent reforms show that the implementation of equal accounting takes a long time. EPSAS should be fully implemented until 2025, which is 14 years after six-pack regulations and the Budgetary Frameworks Directive. A more precise timeline will follow at the end of the presentation. In addition to the expected resources, the implementation of an equal accounting system requires high commitment and persistency. In the presented study, the PwC also outlined specific implementation challenges by reform divisions and possible support methods to master them. Before we'll talk about these specific implementation challenges, let's have a look on the so-called first-time adoption dilemma. The first-time adoption dilemma describes a specific situation preparers have to face at the first-time adoption of equal accounting standards. In detail, there is an interplay of different aims which should be accomplished by the implementation of equal accounting methods like EPSAS or IPSAS. First, there is a desire to represent and cover the complete assets and liabilities of an entity in the opening balance sheet. Second, the reforms aim at measuring these assets and liabilities as accurate as possible. The third point refers to the restricting time and resources. It is obvious that these three factors cannot be completely accomplished at the same time and that they affect transparency and comparability. For example, the intention to reach the complete presentation and most accurate measurement disputes with the limited resources and time restrictions. Experiences from the first-time adoption of IPSAS show following resolution possibilities. First of all, the standard setters can resolve this dilemma by restricting the required completeness to the most significant assets and liabilities. In addition to that, it would be possible to provide simplification with regard to the measurement requirements for selected items. The development of concrete guidelines for the preparation of the EPSAS opening balance sheet would also support to reduce the dilemma. This should be accomplished especially with regard to the recognition and measurement of assets and liabilities. It is also necessary to add a specific standard on first-time adoption of EPSAS. This standard should include detailed instructions and instruments and can be based on the IPSAS standard number 33. This standard on initial adoption relies on the experiences made with the first-time adoption of IFRS and would be an appropriate basis. As you can derive from this lecture, implementing equal accounting is more than changing the accounting rules. It is a project which impacts the whole organization of our government. In the mentioned study from 2014, PwC also questioned the member states about their most important and crucial implementation challenges. These challenges can be related to 4 different reform divisions: the entities policies, processes, people, and systems. The following challenges have been reported by the sample countries which already have experience with an equal accounting reform. Let's start with the reform dimension, policies. The country stated that challenges can arise at adapting existing financial rules and regulations and at documenting the accounting policies. Furthermore, it is important to develop appropriate guidance and manuals. To support the development and implementation of complex topics, implementation rules should be defined. The next part is related to the development and implementation processes. The study outlined that especially the monitoring of the implementation phases is important. Challenges can exist at data collecting, and so it is important to check the data quality during the reform process. This starts at the data collection and continues with checking the data quality during the reform process. Furthermore, it is important to ensure compliance with existing regulatory framework and to monitor the transition period and implementation phases. According to the processes and policies, the IT systems are an essential reform sector. As we have heard before, an existing capable IT infrastructure would reduce the implementation costs significantly. It is challenging to adapt existing IT systems and develop new IT solutions which are tailored to the reform requirements. In addition to that, the implementation and translation of organizational processes into the IT environment is crucial. The previous three reform dimensions concentrated on technical or legal requirements. The most important point mentioned from the sample countries relates to the affected people, a government staff or public employees. Basically, it is necessary to inspire a change of the mindset and of the culture. As we have already heard in this lecture, it is important to use specific expertise and knowledge from the affected public sector accountants. This can be reached by developing special training programs for the staff. The PwC study concluded that these four dimensions of challenges are equally important and should be considered by the project management when reforming the accounting system. In addition to the specific recommendations to face the implementation challenges, some general implementation requirements can be identified. As we said before, the adoption of accounting rules and regulations can be challenging. This also includes the significance of a strong political support. Furthermore, public administrations should be capable of running a complex accounting system. Especially the mentioned suitable IT systems and the availability of human resources are essential. Moreover, effective internal controls and effective external financial audits are required for the implementation of EPSAS. Before we move on to the final outlook on the implementation of European public sector accounting standards, let's have a look on practical examples of EPSAS implementation. It is important to keep in mind that there is no perfect implementation or solution for various problems, which is absolutely valid for all member states. In the following, I will show you specific implementation sectors with specific implementation hints. These information were gathered by the PwC from sample countries that have already experienced an accurate accounting reform. Let's start with the organization and approach sector. The results of the study highlighted, for example, that an efficient project management based on a clear project structure is absolutely necessary. In addition to that, the responsibilities should be well defined and the impacts and risks of the new reporting method should be analyzed early in the process. To support the communication and change management, regular communication, especially with the various stakeholders, is significant. Moreover, a clear vision on the implementation of equal accounting and political support is necessary. Constant training efforts are also required throughout the whole implementation period and beyond. This can, for example, include initial training, and continuous learning programs for staff. Annual seminars and meetings, as well as the implementation of a help desk, can be a good support. To deal with the new accounting and reporting rules and instruments in the most efficient way, existing administrative and operational processes sometimes need to be adapted. The policy and procedure manuals should be updated to reflect the actual framework. Today, we heard about the importance of a suitable IT infrastructure for several times. To guarantee a smooth project implementation, a close communication of IT work streams, and a close coordination with the IT team is necessary. Sharing the IT development costs by several entities may reduce costs associated with the whole system dimension. At the end of this lecture, let's have a look on the current and future steps of the EPSAS development and implementation. The European Public Sector Accounting Standards are expected to be implemented over a period of 10 years. While the development and specific pre-arrangements started in 2011, the implementation started in 2015. The Commission encouraged the voluntary implementation of EPSAS. From 2016 to 2019, various steps and operations are expected to be finished. For example, the conceptual framework, the first and second batch of the standards, and the consolidation of government accounts. In 2019, the EPSAS framework and the EPSAS standards should be adopted by the member states, and the final implementation should be finished until 2025. Continuing this implementation timetable, following aspects are important for the future development. First of all, it has to be determined to what extent EPSAS can be derived from EPSAS, and to what extent EPSAS have to be newly developed. As you learn in this lecture, EPSAS are a suitable starting point for EPSAS, but they have to be adapted and modified to a specific extent. Especially the design of the EPSAS-based endorsement process is a critical point. Furthermore, it is important to complement the EPSAS-based accounting standards with corresponding budgeting standards. Until now, EPSAS left out budgeting. The next point shows the importance of the synchronous development of the rules of consolidation and the new budgeting and accounting system. Finally, it should be considered that the expected costs of the conversion toward EPSAS are not fixed. The creation of financial reports, budgets, IT training, communication trainings, and so on will lead to a severe financial burden for public sector entities. In this lecture, I've shown you various aspects of the European Public Sector Accounting Standards. You heard about the development, the connection between EPSAS with the EPSAS standards, and now you have a detailed knowledge on the implementation of EPSAS. In the final conclusion, we try to summarize the most important facts related to EPSAS. So EPSAS might be the answer to the European sovereign and persisting Greek debt crisis. Since the implementation of the Six-Pack Initiative in 2011, the European Commission intends to develop a harmonized European accounting regime. In accordance with the current state of knowledge, EPSAS will base on the existing EPSAS standards. For member states, these reforms partly result in enormous application and switching costs and efforts. To reach the comparable implementation across countries, EPSAS will affect national budget law and will empower European budget monitoring. A study by KPMG found that around 90% of accounting experts expect an introduction of EPSAS. However, EPSAS are not developed yet, and there are some challenges to overcome in order to tap the full potential of a European accounting system. In addition, there are some controversial opinions in terms of the benefits and expected impacts of EPSAS, like, for example, the German Federal Audit Court. Points of criticism include the costs of EPSAS, political concerns, and legal challenges. Researchers also discuss the implementation of EPSAS and mostly argue in favor of an accrual-based and harmonized accounting system. So, there remain open questions, and we are curious about how the European accounting system will change. We are now at the end of the lecture. Thank you very much for listening and spending some time with us on learning about European public sector accounting.